Good afternoon. Welcome to CNBC-TV18 Mumbai Newsroom. I'm Sonal Bhutra and with me is Ekta Batra. You're watching Your Stocks. Hey Ekta, good afternoon. Well, interesting day to talk about a lot of queries because there has finally been a dip after that stellar run that we've seen. So whether to hold, whether to buy at these levels, will there be more decline from these levels? Interesting day of getting some more queries.
Hi Sonal, yes absolutely. You know, there is profit booking after 8 consecutive days of gain for the Nifty. So yes, warranted considering the kind of gains I'm sure a lot of retail investors are sitting on, considering that they invested cautiously and are good stock pickers if in case they did not go through the SIP route. But let's get to our guest then. We have Kush Bohra, founder of kushbohra.com, and Astha Jain, research analyst at Hem Securities, joining in to discuss all of your queries this afternoon. Welcome Astha as well as Kush to the show. Let's get to the first query then. We have Mosmi Das, who writes to us from West Bengal. She holds 100 shares of Zydus Life, which she's bought at around 554. She's a medium-term investor and wants to know what to do, whether to hold or sell this particular stock. Well, Astha, let's start with you because Zydus Life, in fact, interestingly, has been on quite a trot on the uptrend and, you know, is joined the list of many pharmaceutical companies which have outperformed. So what would you recommend to Mosmi of when it comes to a holding on Zydus Life?
Hi, good afternoon. So talking about Zydus Life, we are positive on the stock. In fact, I would like to recommend if she can add more, then it's a good thing because I think Zydus Life will be showing, the long-term targets of more than 600. Although at the initial level, we are recommending 610 to 620 targets. Now, why we are positive? Because first of all, the results which they have posted in the quarter gone by were excellent. And secondly, they have got various approvals around, I think 17 to 18 approvals they have already got. In fact, they have invested in a Pune-based diagnostic firm also. That was my line, I suppose. Apologies if I'm wrong with the name, but they have invested in the Pune-based diagnostic firm also. So I think these investments and the kind of the results which company has posted previously, all these are signaling towards the higher rise in the stock prices, and that's why I recommend to hold the stock price at least till the level of 610 to 620. So I think hold is a better choice, and in fact buying on dips is also recommended.
Okay, all right, Astha, thank you for that take on Zydus Life. But let's go across to the next query that we have. It's coming from Kartik Dattani, who's writing to us from Bengaluru, holds 700 shares of Ujjivan Small Finance Bank at an average cost price of 23.85 rupees a share. He is a medium-term investor and wants to know whether to hold, add more, or should he switch to Federal Bank or Equitas SFB. That's a very specific query that we have coming in from our viewer. Astha, what do you make of this? Should he hold at these levels? Are there better options other than that particular stock?
I think hold is a better choice because Ujjivan Small Finance Bank itself is showing a good fundamentals. First of all, they are expecting to grow their credit at around 26% CAGR from FY23 to 25. So that itself is a good thing to, post a strong financials going ahead. In fact, whatever the bank is doing, the small finance bank, they are now focusing towards, non-MFI portfolio, and which is a secured one. And that portfolio is really giving strength to the bank's financial. So that is also signaling a strength for the bank in the coming future also. So I think it's better to hold rather than going with the Federal Bank or any other bank. Here the price target can be set at rupees 50 at the initial level.
Okay, well, fantastic returns which have come in on Ujjivan, definitely. But Kush Bohra joins into this conversation as well. Kush, hi, welcome to the show. Afternoon. What would your thoughts be on the technicals of Ujjivan Small Finance Bank, currently over 40 odd rupees? The current, the price at which Karthik bought it at was at around 23.8.
First, congratulations to Karthik. He's nearly doubled his money and he's still, holding on to that. So definitely a good pick. There isn't anything suggesting on the charts that, this is perhaps, going to stop anytime soon, especially given that his view is, short to medium term. So I would suggest that, hold on to this. I agree with the targets that Astha's given. 50 to 52 is perhaps where the stock could head. And I was also comparing Federal Bank and Equitas. While Federal Bank does not seem to be in the same league just as yet as Ujjivan, especially with the recent move, Equitas perhaps could be considered. But given the kind of returns that he's made on Ujjivan and the kind of movement that it's already seen, it's not a bad idea to just be in Ujjivan for now.
Okay, so technically and fundamentally not a bad idea to be invested in Ujjivan for now. Let's go across to the next query. Srikanth is writing to us from New Delhi, holds 100 shares of Sonata Software purchased very cheaply 15 years ago at 150 rupees per share. He's a medium-term investor and wants to know whether to hold or sell. Well, definitely 15 years is not a small period of time. For 15 years, you've held it from 150 to 1006 rupees per share. So congratulations on that, Srikanth. But Astha, what would you suggest now? He's already seen decent profits here. What should be done?
I think he should continue to hold this stock. Maybe in the near term, some volatility can be seen, but the long-term prospects are intact. In the near term, we can see the price target of around 1,075 to 1,100. So I'm positive with this company because first of all, the kind of revenue mix they are sharing, because only 24% is coming from the IT and rest 76% is coming from the product licensing and deployment business. So this mix is really very good. Apart from that, the integration of a quant is really beneficial to the company in the long term, and we will be seeing the revenue growing at a CAGR of more than 20 to 25%, at least from FY23 to 25. So next couple of years are also looking strong for this company, and that's why I recommend hold on this stock.
Okay, well, Kush, Astha, it really, highlights the ability and the benefits of sticking on to a stock for a long-term period as well. Kush, do you think that there's more gains coming in on this one? Sonata Software?
Absolutely, Ekta. In fact, if I look at the long-term charts and if I switch the monthly time frame, the stock is actually seeing a vertical rise on the back of strong volumes. This is just suggesting that even on the long-term frame, the stock is likely to do well. In fact, this falls in the category where if you've invested for such a long time and you want to hold on to this, it will not be a bad idea to even add more on dips. There haven't been any meaningful dips except for the 2020 phase, the COVID phase. Otherwise, the stock's been doing fairly well. Not a bad idea at all to hold on to this one. In case he wants to take some profit off, that's another story. But this is like a buy on dips stock for now. I wouldn't be surprised to see 1250 and 1400 kind of levels in the coming months on this one.
Okay, all right. That is on Sonata Software. But let's get to our next query. Shashi Rathod writes to us from Bangalore. She holds 25 shares of Tube Investments, purchased at 750 rupees since a few years. She's a medium-term investor and ready to hold for 2 more years. Wants to know whether to hold or exit at present levels. Astha, your take here.
I think hold is a better choice. So first of all, price target 3,400, not for the 2 years, but at least in the near term, we can say these targets can be set. So why I am positive on this? Because their engineering business is expected now to perform well, at least in FY24. So we are really looking after that division. And in fact, in the EV division also, they have done with their capex cycle, and it is we are expecting that investment which have done in that will going to commercialize in FY24 itself. So again, all these things are signaling that long-term prospects are really high for this company. So I think if there is a no hurry of getting money out, then definitely a stay is recommended, and the price target is 3,400.
Okay, well, we're really talking about a lot of multi-baggers today, definitely. But Kush, what would your recommendation be? And just an additional thought where, people are making such superfluous gains when it comes to mid and small cap stocks that there is this feeling of missing out, and a lot of people might enter the markets also. What kind of advice would you give them? Probably tread with a little bit of caution, not only talking about Tube Investments where it is a 300% gain that we're talking about, but in general at these levels when people try to enter the market.
So, that's an excellent question. Let me just first address the, Tube Investments query. I also agree with Astha on this one. It's a fabulous investment. Even recent moves on the stock have been extremely encouraging, and it's broken out of its, resistance bands. I wouldn't be surprised to see 3,600 and 3,800 kind of levels on this. Any dip towards the 50-day moving average or the 100-day moving average should be bought into, and this is a category of stock which should be added more. That's on Tube Investments. And the question that you've asked is actually quite timely. The markets are at a high and you are getting a lot of FOMO feeling, right? The best way to play this out is get into SIPs, get in a structured manner, get into stocks where you've always wanted to, even though you feel they're high, but get into the stocks in an SIP manner. Also, and more importantly, if you're sitting on stocks which have not been done well, this is the best time to get out of them. Kind of the kind of momentum driven rally we are seeing, this might perhaps be your best chance to exit. So don't play with the emotions, play with logic, get into an SIP. Even if the markets are at a high level, it's not a bad time to get started.
Okay, all right, take that point. Not a bad time to get started. Invest in SIPs. We'll continue this conversation on the other side. For now, we'll slip into a break and get more stock queries after this short break. Welcome back. You're still tuned into Your Stocks on CNBC-TV18. We still have with us Kush Bohra and Astha Jain to answer all your stock queries. The next one that we have is coming in from Vivek Markan, writing to us from New Delhi. Holds 600 shares of JBM Auto at 517. He's a long-term investor and can hold for next 5 to 10 years. He wants to know whether to hold or book profit. Well, JBM Auto has been in news of late. The stock has been surging as well. What is your take, Kush? Hold or buy at these levels, or sell at the profits that our viewer has already made?
If cash is not an urgent requirement, there is absolutely no need to sell this. The stock is slightly off the highs that it recently made of 1500. But again, if you see it on long-term chart, it is doing fabulously well. In fact, this is also of the category which you should add more on declines, plus the entire auto ancillary space is doing well. So I would suggest, if cash is not an issue, hold on to this one. The stock could very well see 1600 and 1750 levels in the coming months. If you're looking for a trailing stop loss on the downside, it's a little lower, about 1150-ish, where the 20-day moving average stands, and the stock's typically respected that. So if that breaches, you might want to exit, but otherwise it's still a hold.
Okay, so that's the query on JBM Auto. We have another query. Anubhav Gandhi writes to us from Ranchi. He holds 100 shares of Avanti Feeds, which is bought at around 320. Medium-term investor wants to know what to do, whether to hold or sell this particular stock, sitting on a profit at this point in time. Astha, what would your recommendation be on Avanti Feeds?
So I'm little positive on the stock, although the results were not that strong in the quarter gone by. But I think as it is a leading shrimp manufacturer with a very strong capacity of 775,000 metric ton. Now, why I'm positive? Because they are expanding also their capacities. So that is looking good. And in fact, we are expecting this company to post strong margins going ahead, because we have seen the raw material prices have shown some sort of downfall. Freight cost has decreased and realizations have increased. So all these things are signaling might be that in the coming quarter they'll post strong set of numbers. So why not hold? So right now I recommend hold with a price target of 430 to 440.
Okay, hold fundamentally on Avanti Feeds. Kush, your take here. Anything from the feed space or the aquaculture space that you think would be better than Avanti?
Well, first I must congratulate the gentleman. He's bought it at the rock bottom price. 320, I can see, is the precise low that the stock had made end of March. So it's a fabulous buy, a courageous one at that. And also the stock's actually been in an uptrend since then. The last couple of days, it's broken out of its resistance zone of 395. So my suggestion here would be, hold on to this because the momentum's still there, but have a strict trailing stop loss at 395 where the congestion zone is, and also the 200-day moving average stands. So if that breaches, you might want to exit, but hold on for targets of 430 and 460. Also in this space, what we like is Kirloskar, oil engines. That is also one stock that he might want to have, on his radar from the agriculture space.
Okay, all right. So that's on the agriculture space. Well, let's get to another query, and this one is about Rail Vikas Nigam, RVNL, where the stock is currently at around 122, corrected quite significantly from its 52-week high, but nonetheless still done well. Chandra writes to us from Bangalore, holds 1,400 shares of RVNL, which is bought at around 75 rupees. He's a medium-term investor, wants to know what to do with his particular holding on this, whether he should hold or whether he should sell and make some profit. Well, Kush, what would you recommend? Do you think that it can at least revert back to its 52-week high? So there is some amount of upside which is left?
There is, but if you look at the horizon that he's mentioned here, it's a short to medium term kind of trade. Now, for that kind of a time horizon, the returns are stupendous and they're just magnificent, right? So my suggestion would be book 50% profit, because the high that the stock had hit, about 145, 150 odd, was early May, and ever since it's gone into a sideways consolidation phase. Can it go up from here? In all likelihood, because it's still respecting its 20-day average, 50-day moving averages. So it could very well, rebound to 145, 150 kind of zones. But it's not a bad idea to take partially, some money home. So my suggestion would be book 50%, hold, the rest with a trailing stop loss of 110 for targets of 140 and 155.
Okay, that is on RVNL. Let's get to the next query. This is an interesting one, considering the news that we just got. Suresh Kumar is writing to us from Mysore, holds 50 shares of Radico Khaitan, bought at 1,110 rupees per share, and 300 shares of Rallis, India, bought at 200 rupees a share. He's a medium-term investor and wants to know whether to hold or sell. Astha, come in on this because just few hours back we got the news that Karnataka government has increased excise duty on IMFL and beer. So how do you look at Radico Khaitan and the alcohol space on the back of that? And Rallis as well, it has been underperforming for as long as I remember. Past 5-6 quarters have been very weak for the company. Do you think things will turn around for this one?
So first of all, let's address this Rallis query. So definitely this news has come as a dampener for the overall liquor stocks, and that's why we are seeing them showing some sort of pressure. But I think in the long term, I'm addressing Radico Khaitan right now. So talking about Radico Khaitan, I think this is the stock which should be hold for the long term perspective, because their brands are really working good. Their premium brands are really working good, and they are getting demand also. And in fact, some of the states, although this news has come, but some of the states, they have really agreed in the past for the price hike also. So Radico Khaitan is looking strong for the longer term perspective. But yes, in the near term, we can see some sort of a downside pressure in the stock. But if our horizon is long term, it is a hold with the price target of 1400. And so now talking about Rallis. Yes, Rallis is not showing good performance. Why? Because their quarterly performance in the last few quarters were not up to the mark. Their businesses are not working well. In fact, seed business has shown some sort of a degrowth, and the margins are also in the pressure. So I think the results which this company is posting is not working well, and now we have to look after the monsoon also, how it will be panning out. So long-term prospects for this counter is really need to be seen, but in the short term, I think a hold is recommended at least till the time results arrive, with a price target of 220.
Okay, and what about your thoughts, Kush, both on Rallis as well as Radico?
So at the risk of confusing the gentleman, Radico, I would still agree with Astha. There is still an upside left, although my targets are higher on this one. 1500 to 1650 is if he is willing to hold on to this one for some time. My stop loss would be 1275. Since he's in a profit, it's not a bad idea to ride this momentum. The dip that we're seeing right now was also expected, or from a technical perspective, that the stock had gone into an overheating territory if you see the RSI. So this dip was, pretty much, in line with expectation. So I wouldn't be surprised to see the stock regaining momentum and going higher. As far as Rallis goes, a slightly divergent view. The stock had been underperforming for a while. It's seen a spurt, but it's finding resistance around the 200-day moving average, which is at 215 level. So my suggestion would be, since he's in a mild profit on this one right now, it's not a bad idea to exit this and switch to a more stronger, a momentum-driven stock at the moment. But Rallis, for me, would be an exit.
Okay, so that is on Rallis India and Radico Khaitan. To the next query now, Ruhi Jumani writes to us from Noida, holds 150 shares of Keystone Realtors, bought at 475 rupees a share. She's a medium-term investor and wants to know whether to hold or sell at current levels. Kush, real estate stocks, they've been buzzing off late, but we've not seen such gains for Keystone out of the back. What are the charts suggesting? Is this the time to look at this one?
Spoke my mind actually. This is not one stock that has performed as well or in line. Recent listing, fairly recent listing, but again has not really delivered as much. So my suggestion would be, because there's a neat profit on this one, to switch. And there are a couple of other names, like DLF, Gojis Properties. These are a couple of stocks that that can be considered. In the smaller players, Anantraj is one player that has been doing fabulously well. So that's also one name that can be considered. And if they are ready to look at beyond the developers, then the likes of Serra Sanitaryware are the ones that you could look at if you're interested in the real estate space. Keystone Realtors for now, for me, would be an exit, a book profit on this one.
Okay. All right, let's get to another query then. Shubhankar writes to us from New Delhi. He holds 500 shares of Sumitomo Chemicals, which he's bought at around 438 rupees. He's a short-term investor, so wants to know what should be his exit target when it comes to this particular stock. Well, Kush, what would you recommend on this one? He's very close to his buy price, so I'm sure he can get to those levels. But do you think that it could go further, and what would a target be?
I think 433.60, which is the current price, is actually a good price to exit. See, the stock's actually rebounded quite sharply, but if I draw downward sloping, if I draw a trend line, it'll be downward sloping, and the stock is still under that, also below its 20-day, 200-day moving average. All signs pointing towards some strain, some stress. The recent rally is perhaps a good time for him to, exit, given that the stock is really close to his cost right now. There are better avenues. I would suggest, a switch from Sumitomo right now, or at least an exit and wait. So yeah, Sumitomo for me is an exit.
Okay, exit Sumitomo Chemicals. The agrochem space in general is not expected to do so well because of high inventory buildup as well. But fundamentally, Astha, how is this one looking?
So here what I'm saying is a little bit different. I think some steam is still left, so he can exit at around 460, 465 odd levels. Although if I talk about Sumitomo Chemical, the results were below expectation, and they have certain, we can say threats from the Chinese dumping also of this agri chemicals. So it is, and inventories are also falling, and prices are not, supported at this present moment of a time, and monsoon is also one of the points. So all these things are factoring that this stock will not going to perform so strongly in the coming time. But still, I think that might be the results might be a surprise, and that's why I think some steam is still left. So yes, he can exit, but I think at around 450 to 460 if he can take risk. So these are the levels where I recommend him to exit.
Okay, all right, Astha as well as Kush, thank you very much for joining in, and do have a great weekend as well. Well, that's all the time that we have on the show, but do remember to email us all of your questions and we will address them with our experts. Stay tuned. Closing Bell will take you through the last hour of trade.